The next statement is a statement of financial position. Statement of financial position. Statement of financial position. Now, the statement of financial position is also known as the balance sheet. A balance sheet. It is a balance sheet and is based on the accounting equation A is equal to C plus L, where A is the assets, C liabilities, and C capital, and L liabilities. So a balance sheet, as I said earlier on, presents a snapshot of the business financial position at a specific point in time, and it shows the assets, liabilities, and owner's equity. So a balance sheet will just have three components: assets, liabilities, and equity. And by now we know what assets are. Examples of assets are cash, debtors, inventories, property, equipment, furniture, plant. Then examples of liabilities are accounts payable, loans, long-term loans. Then owner's equity will represent the capital, the drawings, the retained earnings or accumulated profits. So maybe what I need to do before we look at illustration is to show the format of statement of financial position. Just like the statement of profit or loss, the statement of financial position can be presented in two ways: the horizontal format, which is a traditional format, horizontal format, which takes the T account. So we'll have it like that. So we have the credit side and the debit side. So the debit side, we record the assets. And the assets can be categorized into two: non-current assets these are long-term assets like land, buildings, furniture, motor vehicles, and so on. So you have the assets there. It's total assets, non-current assets. Then there is the current assets. Current assets comprise inventories. We have the account payables or debtors, like that. We have prepaid expenses, cash at hand, may have cash at bank, and so on. These are just examples. So we take the total current assets, we add to this total non-current assets. So these two, we add these two, total non-current assets plus total current assets. Here we have total assets. So on the debit side, we record the assets. Then on the credit side, we'll have liabilities. Again, liabilities, we have long-term liabilities, like the long-term loans. We also have short-term, short or current liabilities, like accounts. This is accounts receivable, not payable. It's accounts receivable. Accounts receivables. Here we have account payables or creditors, accrued expenses. There is short-term loans, bank overdrafts, and so on. So these are liabilities. So we have the current liabilities here. We add the current liabilities. These current liabilities are added to the long-term liabilities. So here we have total liabilities. Total liabilities. To these total liabilities, we add capital. We have capital there. To this capital, we add retained profits or net profit, undistributed profit, the net profit, we add it there. The drawings, we deduct drawings from capital. Then the net, we add it to liabilities. So on the credit side, we have liabilities and capital. Total liabilities plus the total capital. This will give us a total there, which should be equal to the total assets. So that's why I said that the balance sheet is based on the accounting equation. Assets equal to, these assets should be equal to liabilities and capital. So this is the horizontal format of a statement of financial position. Now let's look at the format in a vertical position, which is the recommended format. The recommended format, vertical format. The vertical format of a balance sheet. So we begin with the assets. So we're going to have the assets first. So this, we just record them. And the assets, then below it, we have the liabilities and capital. So begin with the non-current assets. The non-current assets. Two columns. Land, buildings, long-term assets. We get the total and current assets there. We add the current assets. We all know the current assets: stock, debtors, bank, cash, and so on. Put it down on that column. We get the total current assets. Add to the total and current assets here. Add these two, you'll have the total assets. This is total assets. We close. So that represents the debit side if you are to prepare the balance sheet in a horizontal format. So this is just presented at the top. Then below it, we have capital and liabilities. So you can begin with the capital, push it towards the end there. Retained profit or net profit, we add it to the capital. If there are drawings represent the money or goods that the owner takes from the business for own use. That reduces the capital. If you are running a shop and every evening you take bread for your breakfast, that represents a drawing. If you are running a butchery and every day you take home 2 kilograms of meat for your own personal use, that is a drawing. It reduces the capital. That's why the drawings here, we deduct drawings from the capital. So we have total capital there. Total capital. Total capital. Then below this capital, we have liabilities. Liabilities. So example, creditors, loans, accrued expenses. So we have the liabilities there. Get the total liabilities, add to the total capital. What we have here is total liabilities, total capital, and total liabilities. So the total capital and liabilities must always be equal to the total assets. Balance sheet equation. Assets equal capital and liabilities. A is equal to C plus L. So that's the format for the statement of financial position, both vertical format and horizontal format. Is that clear, candidates? Any question on that? Now, I want us to use the illustration we used in the preparation of the statement of profit and loss account to prepare the statement of financial position. So from the trial balance of Rehema Enterprise, can we now prepare the statement of financial position? The name of the business is Rehema Enterprises, the sole trader. The sole trader's name, Rehema. Rehema Enterprises. Then we write the name of the statement, which is a statement of financial position as at. Position is as at. The trading profit and loss account is for the year ended. This one is as at December 2015. Get the difference. The statement of financial position is as at. The position is as at. The performance is for the year. Profit and loss account is a statement that helps us see the performance of a business. So you write trading profit or loss account for the year ended. But if it's a balance sheet, you say statement of financial position or balance sheet as at. So first we have the assets. We begin with the non-current assets. Two columns. Now, can you help me identify the non-current assets from the trial balance? Premises, do you have premises? Yes, premises is 5 million. Premises, 5 million, followed by motor vehicles, motor vehicles, 1.8 million. Then we have fixtures and fittings, fixtures and fittings, 350,000. There is no any other non-current assets. Give me the total. Then we add the current assets. Somebody help me identify the current assets. John says the total non-current assets is 7150. You can confirm that. 7150. Give me the non-current assets. Rehema Enterprises. Ian. All assets and the current and non-current assets, these balances in the trial balance must appear on the debit side. All assets have debit balances. So concentrate your eyes on the debit side. Don't look on the credit side. Just look on the debit side. Give me the current assets. George says debtors. That is correct. Debtors. The amount is 3896. 3896. Give me another item. George says cash at bank. That is true. Cash at bank, 482. Cash at bank, 482. Rehema has cash at bank amounting to 282,000. Is there any other? Stock. That is true. Which stock? We are preparing the statement of financial position as at December 2015. So the balances must relate to the date December 2015. The opening stock, you can see from the trial balance, is written opening stock 1st January. That is the opening at the beginning of the accounting period. The stock that we indicate at the end of the accounting period is a closing stock. closing stock. The closing stock is the stock at December 2015. The closing 2946. 2946. Please note down that the value for inventories in the statement of financial position is the inventories at the closing. If you are preparing a balance sheet at the closing of the accounting period, at the end of the accounting period, then the stock should be the one for the date, closing date. But if you are doing a balance sheet as at the beginning of the accounting period, that is when you use the opening stock. So give me the total current assets. So this will be the total assets. To this total assets, we just close, get the total there, then we close that bit. Then here we have capital and liabilities. Can begin with either capital or liabilities. Let's do capital. The capital, the last item in the trial balance there, and the capital candidates will always have a credit balance. When you are looking for capital, just look at the credit side of the trial balance and you get it. 12,636. 12,636. That is the capital. Then we add net profit. This is the net profit for the year ended December 2015, and we have it here. This is the net profit for the year ended December 2015, 1617. We add it here, 1617. If there is any drawings, we deduct. We have drawings. Yeah, drawings we have, and candidates again, drawings always appear on the debit side, always on the debit side. Drawings 1.2 million. Deduct 1.2 million. Give me the total there. Then we have liabilities. Help me identify liabilities. 7324. What is 7324? Total assets? 7324. 7324. Or this one here. 7324. Think so. Help me identify liabilities. So 13,003, the total assets 13,003. Help me identify the liabilities from the question. And liabilities will always appear on the credit side. And I can see only one liability there, creditors. Creditors 1731. 1731 creditors. To these creditors, let's add the capital, the net capital. Total assets, someone says 14,474. $14,474. Let's confirm. 14,474. 14,474. Capital, total capital. Total capital 13,003. 13,003. Is it adding up? I'm getting another figure, 13,053. Capital. 13,053. Which is which? Which? Total capital and liabilities. What is 14,784? $14,784, 14,4. How about total assets? What is the total assets? Total assets. Carriage inwards. And that is the carriage inwards. Carriage inwards. Did we account for carriage inwards? Did we account for carriage inwards? No. Carriage inwards in the Rehema trading profit and loss account. Look at the board. Carriage inwards. The carriage inwards is part of the purchases. So add carriage inwards here. Carriage to purchases. Add carriage inwards. Add carriage inwards. The amount is 310. Add 310 there. Carriage inwards. Carriage inwards is part of the cost of sales. Carriage inwards is a transportation cost. If you look at the format that we did, we had carriage inwards. This question has carriage inwards of 310. So add 310 to purchases, then adjust this figure. How much is it? What will be the right cost of sales? Please redo the cost of sales. 2368 plus 11,874 plus 310 minus 322 minus 2946. What is the cost of sales? $11,284. $11,284. This $11,284, deduct it from the net sales. What is the right gross profit? Gross profit 11,284. John says 7,111. If it is 7,111, then adjust the net profit. What is the net profit? The expenses are not affected by that change. Deduct 5804 from 7,111. 1307. So you work with 1307. If profit is 1307, this profit $1307. Now deduct 1307. Let me confirm. Deduct 1307 from 1617. How much is it? Is it 310? So the profit here we adjust this profit. So the right net profit there is 1307. 1307. 1307, which affects the net capital. Give me the right net capital here. $12,636 plus 1307 minus 1200. 12,743. 12,743. Then is this total 14 474. Is it the total agreeing with the total assets? Is it agreeing? These two must agree. They must be the same. And if they are not the same, then you've made a mistake. In this question, we omitted the carriage inwards. That's why I told you to give me the balance. The balance here. If there is no error in the question, these two must agree. So the starting point when you are doing this statement, these totals, the first thing check you can make is to get the difference. Like in our case, we saw it is 310. Then you go back to the trial balance. You check if there is 310. That's what we did. You told me it's 310. I went to the trial balance. I saw a 310. Then we checked if that 310 was accounted for. Then we realized it was not accounted for. We made the change. Then we made the correction. But candidates in your exam room, because of time, you may not have time to go back checking your answers. Please, in your exam room, if you do what we did, because we mark entries. If this is question 1, this you will get marks for these entries. Okay, you will get marks for these entries. You may miss a mark here because of the omission, just 1 mark. So what you do, concentrate on the right ones. These ones, do the right entries. And sometimes you advise students not to bother doing the totals. Sorry. Just make the entries. You can leave the blanks in the exam room. All right. Just make the right entries. Pick the right entries. Make sure you have the right entries. These are marks. Get the marks. Okay. Concentrate on inserting the right entries. The right entries. If there's an entry you're not sure about, proceed. Go to the next one. Get the marks. Don't bother counter-checking your work and see where you've made a mistake if this thing is not agreeing. Just do question 1, move to question 2, make the right entries. Because if this omission was made, you just lose a mark and maybe another one for the totals. But out of 20 marks, you score the 18 marks. So thank you. God bless you. Bye-bye.